Yo, what's going on, guys? Bexio back, and today we got a brand new video on Bitcoin and the volatility that is going pretty crazy right now. A lot of people going to be trading this and obviously going to add volatility up to this opening week of the stock market, where the futures ETF is supposed to start trading either Monday or Tuesday is what a lot of people are thinking right now. But if we jump right into the price of Bitcoin, you can see, the price flying all over the place, literally changing multiple times a second. So right now, we are fighting this line right here, this support line of like 59,600, somewhere around there. You see we've wicked below it, currently just barely above it. And obviously, we want to fight for this $60,000 for the weekly chart, because on the weekly we are looking at, getting close to where these closes were before. 60,592 was a close, around that level. So we're very close right now on the weekly to closings where we were near all-time highs, and that just would be a good sign. But for the daily here, we're still in this channel, got pushed down from the top of it, and now looking for this line to be support to get back above 60,000 ideally. But with this ETF launching, it brings up a lot of talk about why it's really not a good ETF. All publicity is good publicity, especially for Bitcoin here. But in the ETF here, it is actually, a lot right here with Grayscale said is close to filing to convert its Bitcoin fund into a spot ETF, and that's what we all really want, is a spot Bitcoin ETF, something that's going to track the price of Bitcoin directly. This futures ETF is, if you were buying into just the futures ETF and not Bitcoin, over a period of time, you are more than likely going to underperform Bitcoin, and the futures ETF might return 30%, while Bitcoin gets 300%, because it's trading futures and derivatives, not Bitcoin itself. And for the SEC, who wants to protect investors, doesn't make sense why they would want to expose investors to the derivatives market of Bitcoin instead of Bitcoin itself. It's never going to make sense. But Grayscale is getting close to converting its fund to a spot ETF. And, Grayscale's investment plans on applying to convert the world's biggest Bitcoin fund into a spot exchange-traded fund earlier this week. It's no surprise. They have been talking about this for a while, and it would be amazing to see them get into a spot ETF and introduce that. I think that would be the best thing for Bitcoin and crypto, in legitimizing the space and bringing much more investors into the space with a spot ETF. I think the futures ETF is going to have a big effect. It's been talked about with being able to push the price to 85,000 is a target for people piling into this futures ETF. But a spot one would do so much more and expose so much more people to Bitcoin, give them the option to do that, and just it'd be overall better for everybody. But we'll see when we get that. And you can see it says right here, Grayscale's ETF would be backed by actual units of the cryptocurrency Bitcoin, not simply linked to it via derivatives contracts such as futures. Should the proposal gain approval, it would be a further expansion of the leading cryptocurrency as a recognized investable asset. So that's where we are right now with the ETFs and everything, is that this futures ETF brings legitimacy, brings recognition to Bitcoin, to the big players and institutions and stuff, saying, it's really not this just small asset. It's not something you can ignore. It has evolved into something that is very, very investable, and taking on this finance world, and sitting on the sidelines of it might be more dangerous than not being involved in it. So you can only hope and wait to see if a spot ETF would actually be approved, when that would come, and that would be one of the best moves to actually come to Bitcoin. This futures one is great, brings all those, legitimacy stuff, but a spot one would be better. And looking at this time period, which is this yellow circle here, is roughly around the same time for each of these other bull runs. You can see it's just been breaking out every time at the end of the year here and during this same time period. So obviously a lot of people comparing 2013 to 2021 right now. You can see a little run up, dip, and then an explosion is what's expected. You can see this again, a run up, dip, into the end of the year explosion. So obviously, just putting these on the same chart, it would be this blue line somewhere like $240,000 of Bitcoin by the end of the year. That's a lot of money to flow in. There's a lot of people that can be skeptical of it. We could see this explosion, very likely or very easily to see that happen. And then if we did see a blow off like this, I don't think it'd be unreasonable to probably see it come back down to like this 140,000, maybe 120, $100,000 level after a blow off like that. If it copied 2013 and blew off and then fell back down, it'd probably fall down to like 180, 160 level. Copy 2017, it'd be a much bigger fall down, probably to that $100,000 level. And look at the monthly returns for Bitcoin. You can see that the end of the year, especially in a bull market, is just very, very explosive. It's 2013, 48, 470%, ridiculous. And then after that huge run up, obviously a red month, that would be expected. But 2013, 2 out of 3, 2017, all 3 were green. 2021, will we end on all 3 being green, rallying into the end of the year? If you look at future, only 1 red month out of 6 in the last 2 bull runs, 2017, 2013. So it's a lot more likely that we see a lot of green and a lot of appreciation in price by the end of the year, comparing it to, history and historical, months and returns based on these bull runs here. And even, in general, you can see these months, it's majority green, and then November, majority green, December, still majority green. So you can see even the averages. We have 11% October, 55, 13. An average is still green for all 3 months. So ending the year, a lot of people are thinking a big price push to end the year. This is why. It's just historically, it's just what happened. And some of the margin or leverage data here, we have obviously the longs still sitting at 28K, kind of not really moving, but the shorts collapsing. This was actually right before I started recording. This was over like 850, so it's fallen even more. But shorts collapsing, longs staying pretty relative. So I think, the downward move, I think a lot of people were shorting maybe into this ETF news, this sell the news, buy the rumor, sell the news type of deal here. But obviously the shorts aren't betting on much more downside. They're actually closing out or not shorting anymore. Longs kind of sitting there. I'm happy with longs being like this because of, when volatility like this happens. We went from 61K, almost 62K, down to this 59. And if that happened with a lot of longs, then we see liquidations, then we see prices being pushed down even further, and that can have bigger effects on the market. So I'm happy seeing longs like this and being flushed out and not really flying back into the space. And we're seeing shorts flush down as well, so maybe not as much confidence there in shorting the market at this point. So we can even see liquidations. It was a lot of longs liquidated in the last 24 hours, $6.2 million liquidated compared to 263,000 shorts. So shorts just closing out, probably taking profit and closing positions. Longs still getting liquidated, but not piling into the market where they're going to be able to really affect the price and on a drawdown see a massive drawdown. And we got to take a look at the hash rate. The price is a little bit front running the hash rate, so maybe a pullback down to where the hash rate's going would make sense. If price almost got all-time high and the hash rate still is trying to recover here to all-time highs, maybe we don't see that run really fast. But we see hash rate still trying to recover here. Getting above, obviously, 180 will be amazing. And at this point, we might break all-time high prices before we break all-time high hash rate, which would be a newer type thing. I like looking at the hash rate and seeing it kind of front run the price. We're seeing a little bit opposite now. Maybe that's for the big pullback, and obviously the ETF plays a role in that. But the ETF launching, if it brings a bunch of money and stuff, we might see the price start to lead on the hash rate and start to make new all-time highs before the hash rate gets there. It would make sense with a bunch of money coming in and a lot of hype over the ETF and everything. Keep an eye on the hash rate. As long as it's recovering and going up as well, I think that we're fine. If we see the hash rate start to dip and the price start to keep going up, we'll probably see a dip in price just because the hash rate seems to be a pretty good leading indicator of stuff. And to end this video off, we will end with Michael Saylor's tweet: is if you wait until everyone understands it, you won't be able to afford it. That is exactly what would happen with Bitcoin. There was a big debate with Mark Cuban and a bunch of Bitcoiners in a Twitter space yesterday, and Mark just really showed how doesn't really understand Bitcoin. Hasn't done his homework, but to be expected, to be honest. So that's going to do it for this video, guys. Bitcoin still looking good. This was to be expected, a little bit of a dump up to, buy the rumor, sell the news type thing. And we'll see how the launch of the ETF and flow of money affects Bitcoin, with the price target of analysts saying 85K is something that this ETF could launch Bitcoin to. So we'll see what happens. But as always, don't forget to smash that like button and subscribe. We're on the road to 1,000 subscribers. See you guys in my next video.